So, so I think we are already live on YouTube. So I will be starting with the introduction about what's happening here. I see that we are setting up some of the things before we start today. And yeah, my name is Alec. I'm your host today. I'm leading the program named Ton Nest. This is a place at Ton Foundation where we support early stage projects, early stage products built on Ton. And we are hosting this kind of webinars, workshops, ask me anything sessions, roast sessions, feedback sessions almost on a daily basis. And yeah, we are very excited to invite our friends across our ecosystem. And this time we are happy to host our friends from SafePal. Hello, Veronica.
Hello, Alec. It's great to be here. Thank you for having me here today.
Yeah, thank you for your time and thank you for bringing such a great topic. And yeah, today we will be speaking about the product market fit. We didn't cover this topic before earlier at Tonnes. I think that would be very useful for the Tonnes audience and for everyone who is building a project, not only on Ton blockchain, but for any startupper, let's say. And yeah, without further ado, I'd like to give the word to you, Veronica. So could you please start briefly with your background about, yeah, just tell us more about who you are, what you're working on, and after that we can go with the presentation.
Thank you, Alec. Thank you for the context. Hello, everyone, for whoever tuning in for this episode. This is Veronica speaking. So I'm the CEO and co-founder of SafePal, a Web3 wallet serving the market since 2018. So before I joined crypto, I was working in a Fortune 500 company in tech and security. I used to be working as a product manager, as a project manager, and also as a government relationship manager as well. My background comes from more from product and ops and go to market. So today I would like to share our takeaways and thought process and our insights regarding how we gradually build a wallet from scratches until a platform that is now serving 20 million plus users. So today let's talk about product. Let's talk about users, what they are actually looking for, and how we gradually find them out. Some of them might be out of your expectations. I hope they could be very helpful. These are all authentic and real experiences from our building journey. But just some personal disclaimer here, since our case doesn't fit for everybody, you can consider it like for a general startup suggestion, or you can take it as like a personal for your personal insights. So we have a Q&A section at the last part of the webinar. So feel free to raise your hand and ask any questions. So today's sharing is mainly to talk about like how we gradually grow and the takeaways from it. Yeah. Alec, should I be moving on for the sharing already? Would you like to add some more?
So yeah, I think the only thing that I want to say is to give a heads up about the Q&A part. So wherever you are watching this, please leave your questions in the live chats on YouTube, on Zoom. Probably some of the audience will be watching this as a recording. So please leave your questions in any chat where you're watching this video. And after that, we'll be going through the questions in the end of this session. And I think we are good to go. Yeah, Veronica, we can see the screen sharing and the title page. So please, the
Mhm.
stage is yours.
Okay. Yeah, thank you. So before we start, I would like to introduce a little bit of what we've been building in the Web3 space so that you have a clear picture regarding where we started and well, where we're coming from and what we have experienced in the last couple of years. So SafePal was founded in 2018. So till now, we are serving 20 million users globally, mostly retail. I have to say like 99% of retail. We do have B2B partnerships, but that's really helping them to grow and to acquire user from our wallet platform. But majority, the market that we're serving is retail crypto investors, people who want to secure and also grow their crypto holdings in the space. Right now, we are seeing about $20 billion worth of crypto assets sitting in the SafePal wallet balances. And we have supported like more than 200 blockchains already. And also we are the earliest wallet supporting the town ecosystem. Very proud of that. So a little bit of the brand story as well. In 2018, we were invested and incubated by Binance, and later on in Animoca Brands and Superscript, the Web3 fund under Singapore Temasek fund, it also invested in us. So that's a little bit journey of a background of the brand itself. So looking at the picture of this page, you can easily find that we have a full span of products that we have built up over the years. We started in 2018 building hardware wallets. So right now we have three types of hardware wallet, price ranging from $50 to $90, suited for different type of users. All of them open source and audited and secure to use, and have a clean 7-year track records on the market. So it was not hacked any at all times, and there's no vulnerabilities detected like from the device. So it's a pretty clean record in the last 7 years. We also have a mobile app that allows you to swap, to trade, to hold the collectibles, to visit your favorite dApps in the wallet. We also have a Swiss banking gateway in the wallet. So that means you can open up a Swiss bank account from the wallet at your fingertips. We do have browser extension, and most importantly, last month we have launched Telegram mini wallet on your favorite app. So like that is another major milestone. So right now, SafePal is accessible on the most popular Web3 social app on Telegram. So you can easily find SafePal right from Telegram app. So these are the product lines that we have built up. This picture probably gives you a more complete picture regarding what we have done over the years. Just to break down, it's starting from 2018 to 19, we spent 2 years building our first hardware wallet, as you can see from the first three milestones. So other than the investment from Binance, we spent the first year and a half on building the hardware wallet itself. And later on in 2020, right before the DeFi summer, right before that November when Uniswap was launched, we released our software wallet and also enabled it with a cross-chain swap. So that is the first step, moving like out of the hardware wallet landscape and providing users with the value-add services from the mobile app in the form of SafePal on the software wallet. And after that, like 2020 marked the beginning of our rapid user growth. So since 2020 to 2022 and 23, we have quickly moved on to like more than 10 million users by having a chain agnostic supporting strategy. So we have by 2020, we have supported more than 100 blockchains already. We have also launched our utility token, which is listed on Binance. And then in the recent 2 years, we are more aggressive in bridging users between Web 2 and Web 3. So you can see from 2024 last year, we have launched a crypto-friendly banking gateway that is bridging the world of Web 2 and Web 3. People can easily on and off ramp. They can own a MasterCard from the wallet. They can spend crypto as they like over more than 100 million merchants globally. So these are some of the big chop down regarding the journey that we have built over the last 7 years. So today I would like to split my sharing into two parts. Feel free to raise any question along the way. Alec is going to bring them on stage for the last section. The first part would be how we view the market paradigm shift in the last 7 years as a wallet builder ourselves. Since we have never taken a pivot over the 7 years, we have been focusing on building the wallet and what exactly wallet segment has changed and how this indicates the overall shift of the trends of the markets. And the second section will be zooming to talk about how we as a builder learn our lesson over the years and what are the key takeaways that we have and suggestions that we can give to all of you potentially builders in the space, or some like maybe some of you already started building and hope they're useful to all of you folks. So the first insights that we take over the last 2 years, which we obviously feel after the Bitcoin ETF was approved by SEC, is that we are seeing segmentations of users becoming more clear. So before the Bitcoin ETF got approved, most of the users, let's say in using SafePal wallets, we categorize them into three sections. But the first section would be what we call diamond hand holders. So these people typically hold large amount of assets in the hardware wallets, but less active moving them on chain. Most of these people holding Bitcoin, Ethereum, the top 5 cryptocurrencies on the market, and they are not really very active, but they are large sum of holdings in the wallet AUM. The second category, as we see, would be the trader, those who are actively on chain, those who are very degen and they engage with DeFi protocols, they move their funds back and forth and try to pursue the biggest capital efficiency out of the wallet platform. The last group of users would be what we call newcomers or newbies, those who just enter crypto with less than a year and they are still exploring some basic stuff such as stablecoin yielding or such as low risk kind of staking yielding programs. So, but in the last 2 years, we are seeing these three categories gradually expanded. So this chart from the Reown, we previously called the Wallet Connect, and later on they rebranded into Reown from their on-chain US report, is that user segmentation is becoming more diversified. So when we talk about finding product market fit, it's probably we probably need to go deeper regarding exactly what kind of users we are trying to serve and to capture here. So from these slides, single slides, we can see that there are real worlders who are more into payment. Let's say, for example, Tom is very into PayFi, and these people care more about real world utility, about spending their crypto, about having actual use case for crypto holdings. While we have the degen and trader who are most active on chain and also using CES, for example. We also have other users who are more interested in some niche of the market, such as like the gamer and also the socialite and the collector. These three would be more into the niche of blockchain gaming, blockchain social protocols, and also NFT segment as well. While the farmer and the newbie would be another two different categories. So it means that the first moment that we start to think about finding the product market fit for your own projects, you would have to probably think clear regarding which group of user segment that you are trying to capture. You can't really capture everybody from the market right now, as the market has been maturing and also growing, and the penetration of crypto has been going deeper over the last 2 3 years. The second insight is that even though we as a non-custodial wallet, like we've been building non-custodial wallet for 7 years, we still find it surprisingly, either from, for example, this Reown report, either from our own survey, or either from the user behavior that we observe from our wallet data. It seems that users nowadays care more about user friendly and UX and also cost effectiveness other than others, such as like security or self-governance, self-custody. This actually comes in a later section on the order here. So this is a very interesting chart. That means even though people who are interested in blockchain and Web3 in general, they do have a free soul. They do believe in the data ownership. They do believe in on-chain governance. But when it comes to using an actual product, let's say a wallet or a DeFi product or any other products, they will still seek a friendly UX and also cheaper option along the way. So on top of this, for example, SafePal Swap actually aggregates both centralized and decentralized channels for people to move assets from different chains. And it's interesting to see that from our swap aggregation, most of the users are going through centralized since they are cheaper that way, especially when they are going for a large amount of orders. Simply because centralized platforms will give a better liquidity and also lower slippage compared to DEXs. And when it comes to NFT collectibles, memes, they will go for DEXs. So this is really an option of priority ranking of UX, easier to use and cheaper to use, and then coming next, followed by security, followed by the range supporting of cryptocurrencies and others. So this is a very interesting anti-instinct kind of takeaway from for all of the product builders, especially those who are building retail-facing products. So this is a pretty interesting insight. And over the last couple of years, we are seeing that the top paying chains actually capture majority of the on-chain value. Let's to be honest on that one. So right now, this is the latest data that we collect from DeFi Llama. So it's interesting to see that like a lot of the on-chain, especially DeFi TVLs, are captured by Ethereum at the moment, and followed by other chains in separate sections. So that means we are seeing a serious blockchain infrastructure overload, and we are lacking the apps on top. So it means that the infrastructure has laid the foundation for the protocol layer, for the consensus layer, but moving on top, we are going to need more applications and more tangible ways to attract newcomers and users to actually join the Web3 economy. So that is a critical turning point. But good thing is that we are seeing this gradually pay away. So we are moving the needle right now. So throughput is no longer a problem, and long-standing roadblocks such as a gasless experience and also gas subsidies and also smart wallet functions are gradually being introduced into the ecosystem. So we are seeing Tong, we are seeing Ethereum, BNB chain, Tron, and followed by a lot of others already introducing gasless experience and allowing smart contract upgrades even. So this is a great suggestion that blockchain onboarding is becoming easier and easier. Previously, in the last 10 years, people criticized blockchain by being too difficult to use and anti-human. But these recent 2 years, we are seeing the breakthrough in blockchain technology that are really gradually solving this problem. So let's say, for example, the recent EIP 7702 upgrades allows all EOA wallets, such as SafePal, to upgrade into a smart wallet. What does that mean? That means if you are using a SafePal wallet, previously you have to use a C phrase. You cannot set account spending limit for your separate wallet accounts. There's no such thing as gas subsidies. There's no such thing as bulk transaction. But moving on next, once the EIP 7702 is upgraded and supported in the wallet can be enabled with such features that is giving users frictionless and seamless experience in using the wallet. So you can send bulk transactions, you can set different spending limits on different wallet accounts upon different smart contracts, which is very useful. You can have like gas subsidies. So that means that developers can actually subsidize the gas fee for users. Users don't need to pay any gas fee. It's subsidized by on-chain builders and the protocols itself. So these are some very useful features that are paving the way for user onboarding and user utility on the blockchain. And most excitingly is that since 2023, 2 years ago, we are seeing social apps like Telegram and the Tom network already setting the stage for mass adoption. I think you still remember the craziness and also the heating trends brought by Hamster Combat and Catizen, some of the most popular and also Notcoin, some of the most popular Telegram mini app introduced by the Tong ecosystem, and we are seeing gradually increasing users for the Tong ecosystem as well. So this is a signal that social apps like Telegram are paving the way for app builders, and they are actually giving the Lego pieces for app builders to build useful and entertaining and engaging applications on top, which is exactly what we need when we look back at the slides of blockchain and infrastructure overload. So this is a critical point that we actually need more social app builders like this, and this is opening a new chapter for real world application and real world utility on chain. So these are some insights that we have seen over the years that is really changing a lot. So in the first, since like 2014 to 2017, we are seeing the development of tokenomics. So back then there was ICO boom, the born of Ethereum, bringing the concept of a world machine, bringing the concept of smart contract, bringing the concept of like a complete audible and permissionless world. And then from 2018 to 2020, we went through a dark age where the market was very bearish. And back then, a lot of the team vanished from the market. But then 2020, we welcomed the DeFi summer. So ever since 2020 to 2023, we have witnessed the booming journey of DeFi on-chain ecosystem growing, including DeFi, including metaverse, including NFT, including memes. And over the last 2 years, we are seeing crypto becoming more mainstream adopted. Since the Bitcoin ETF was approved and later on followed by Ethereum and then later on followed by the guessing of Solana also becoming the next approved ETF as well. And also we are seeing ever since the Trump presidency comes in effect, a lot of the restrictions are taken off from crypto. And even like we are seeing new regulations coming live very soon from the US government. So we are seeing these needles gradually moved and the roadblocks gradually clean and the way paved by regulators, by builders, by the ecosystem participants over the years. So it's definitely a very exciting chapter to open for this year of 2025 and then moving on next year, 2026. This next part would be like what we have learned. Like SafePal has been building a lot of stuff, like I just introduced. We build wallets, yes, but we also build a lot of tools. Let's say we have gas station in the wallet. We have a revoke manager that help you to scan your smart contracts authorizations, and you can one click to revoke any one of them. We also have a lot of aggregations of on and off ramp, of trading, of swap. So it actually took us a lot of time and resource to build the product into this stage. And here are some of the major takeaways from our 7 years of building experiences. The first takeaway or the thought process is that do not make decisions for users. Um, just now, I have mentioned that user segmentations is becoming more clear. We are seeing users becoming more diversified. User needs would vary among different segments and scenarios. Sometimes you see the user profiles overlapping with each other. So it's important to try to make the product as accessible and inclusive as possible. So in our case, we spend a lot of time developing different kinds of wallets for people to use. So for example, for the diamond hand holders, a lot of them prefer to use the hardware wallet suite for ultra security, while we also have active trader and DJ users who prefer to use the mobile wallet that gives them the maximum flexibility and like interoperability across blockchains in one app. So this basically give them a hub of all kinds of one-stop solutions, including securing, growing, staking, swapping, trading your assets, and collectibles. And also we have browser extension, and also last month we introduced the Telegram mini app. So we are trying to make the product as accessible and inclusive to make it easier to use for different kind of users. I believe this would be very important, especially when trying to find the product market fit. Firstly, it's very important to understand who you are serving the product to. Second would be like how you make sure that your product appear on wherever accessible channels that these users will be using. So like it's very easy for product managers to think that users might need this, might need that, but sometimes we just have to be open-minded. It's pretty important to keep the eyesight open and keep trying different things until you find the best fit for your target users. So this is the first takeaway that we have learned along the way. The second is pretty important for early stage startups. If you have a business already profitable, already sustainable, then regardless, like you can skip this part. This is the suggestions that I'm giving to all early stage startup builders and entrepreneurs. Like try to focus on the core business model in the first stage. Try to make clear of like run through these questions and revisit them regularly. These are the questions that even till today I'm asking myself. It's a very healthy cycle that I can calibrate my trajectory regarding how I design my next step. The first part is what I just talked about, like what people like need and how strong they need it. Like for example, is this a consistent long-term demand or is it a short-term? How sustainable it is? And since blockchain technology has been changing very fast, will it be overthrown by new elements such as technology evolution or big players coming in? For example, like 5 years ago, if you're building an EOA wallet, that's probably the future. You are right, and I won't say anything different. But nowadays, if we look at the wallet segments, probably people would need to spend more time looking at AA and small wallets, which would be the next generation of technology. So it means that some of your conceptions that you decided to build your whole business idea upon would change over the way, and the environment change could cause drastic changes to your own business model as well. So this would be something that is pretty critical. For example, if you are having some gas subsidy features, you are having this feature as a paid or subscription model to users, then if the smart wallet comes to life, then this business model might no longer exist. So this is an example of how technology evolution could change the whole business model and wipe out a whole segment of builders and startups. For big players coming in is also usually another factor. For example, previously we have never imagined Robinhood having their own crypto marketplace, but now they have. So this is actually posing a fierce competition against the Web3 crypto native exchanges. So this is changing the competitive landscape and also changing the business model as well. So this is like something that we have to think about long term. The second term is like if we see a strong user demand, is that opportunity belonging to you? That is the second question to ask, like what I'm capable of, what the team skill set would be, how possible I can grab that opportunity. If it's a big opportunity, like why is it mine other than others? So what is the competitive edge in fulfilling such user demand? So this would be the second question. If you are not having a strong and confident answer to these questions, then you probably need to consider how to structure your team to capture the opportunity, or you might have to find a better fit for yourself in the team skill set. So in our case, the reason that we started building hardware wallets other than mobile app out of two reasons. The first thing is back then, hardware wallet it's a very healthy business model that we already seen and verified by early day movers such as Ledger and Trezor. And while in contrast, 7 years ago, software wallets segments doesn't see a very clear business model. So that means there could be a problem of the sustainability of the business and the company itself. So this is the first reason. The second reason, which is also echoing with the second part of the question here, is that our team is a rare team that is hybriding hybriding both skill sets in hardware building and software development. So we have the full set of know-how of building manufacturing hardware devices. And also we have the know-how of developing and designing friendly UX for software. So this is a rare combination of the team skill sets. So that's how we started building hardware wallet and gradually expanding the product landscape to other sector of the retail facing wallet. So this is the second part of the question that I would strongly recommend team startups and founders to think about. So the first two sections would consist of a complete picture already regarding what people need and why I can capture that opportunity. The third part usually comes right after you have a product idea or business idea. That would be what are the business value out of it. So this is the core elements that would be providing the sustainability of your business model. It means that you have to find a healthy business model that can sustain the team development, that can like sustain the paycheck, that can sustain the like hiring new people helping. So that essentially means like would people want to pay for such product, service, or features that you are building? So this is something that is very important. And how do you find it out? So it means that like building an MVP, the minimum variable product, would be key to that question. That is that you have to test out with an MVP on the market reaction and find out who is your initial users, who would be your seed users, who will be your second tier user that could potentially be paying for the products, how fast they will be paying, and how fast you will see the cash flow coming in. And is it a subscription model? Is it a one-off payment model? Or is it more like a mock-up fee model? And how to build a traction on top of that. So these are the business elements that we would need to consider, especially as founders, because if it's a fun product, but nobody is willing to pay for it, then it's probably ended up in two results. First, the company run out of runway and go for bankruptcy. Second, you have to rely on external investment, which is potentially, to my understanding, is a debt. So other than support, you will have pressures from the asseting requests from external investors if you don't have a business value. So don't consider external investment as an opportunity, more consider it as a debt. So it means founders would need to consider how to support the business and how to extract the business value out of the product and service, whatever thing that you are building. We are glad to see that over the last 2 3 years, a lot of the excellent team and or partners that we've been working with have a very clear sense of these concepts. And we are already seeing healthy business models in some of the on-chain ecosystems already, which is very encouraging. But I do believe like the average age of the founders in the space is pretty young. I saw a report before, like it seems to be under 30 years old. So that means a lot of these people probably is their first time startup experiences. So this might be a new concept to these people. And so I strongly recommend all of the early stage founders will need to consider this page as well. Last but not least, like, do I have to fundraise or not? So this is not, there's no absolute answer to that one. It's a pure financial assessment regarding like what is your current runway, means that what is your pocket or your current cash holding, can how long can the cash holding support your team from going in the future? Is it 8 months? Is it 12 months or longer? Usually, from my understanding, you need to have at least 12 months of runway to support the team, whichever size the team that you are running right now, to have a safe zone for your development. This includes building your MVP, testing the market, finding the product market fit, and having the first official product launch, and then having the cash flow gradually designing and building up. So my recommendation would be at least 12 months. So don't rush in if you kind of have a lower financial assessment at the current stage. And also second element would be like how are you growing your team size and the budget spends in the coming months, because this could potentially shorten the current runway that you have. So like over the in the short trajectory of the future, like let's say 8, 10 to 12 months, are you increasing the budget? Would you be seeing a sponsorship of a major conference? Would you be hiring new expensive staff members in the team, or would you onboard new founders, new co-founders into the team? These would all increase the budget spend and impact your current runway. And last but not least, if the question for the two parts are negative or not positive, then indeed you would have to consider potential investors. But other than pure financial support and or just collecting the brand logos, like this is a very straightforward. So sometimes like it's also a trade-off, like regarding having external investors and while having a nice logo wall on your website. This could potentially give you more endorsement and trust base from your clients and potential customers. But I would recommend to carefully filter your potential investors. Try to find those who really appreciate what you are building, who really recognize the value of your products, who can give you suggestion, feedback, advice regarding founding a company, or ideally they would have clean track records regarding their previous portfolio management. And you can have some background chat on their previous portfolio to understand how they are investing. Would they be crazily looking for exit like right after they invest in your project? Would they push you to launch a token even before you're ready? So these are some questions that you would have to reconsider if you are getting potential investors from externally. So for the last part of the section here, fundraise is not a must. So there are several reasons that you probably need to go for fundraise. First, you indeed find a perfect product market fit. You have the MVP tested out with the minimum cost bear already. You just need enough money to scale and build out the team that can really deliver the product. So this would be financial support. The second would be brand endorsement, of course, like collecting the logos and put it on the website. And this will give you initial support on acquiring the early stage users. And last but not least, other resources from the investors, such as incubation support, marketing support, KOL network, and advisory support regarding building the product and building the go-to-market strategy. For this, you probably have to do some more in-depth research and investigations regarding how well the reputation of the VC brand is in the niche of investment. So these are the questions that I still regularly ask myself. That is like what people need, why me? Can I do it well in the long term? Do I need external support? So these are the 4 sections of questions that I recommend you to go through if you're starting a new business or if you have already started. It would be very healthy to regularly think about it and to calibrate the trajectory of your company product development over the longer term. Of course, on top of that, there are a lot of other questions to consider as well, like regarding like how to find the perfect talents to support, how to control the burn rate while delivering the product. Does it make sense to spend money on KOL, on PR agency, on other go-to-market support? I would address some part of that in the later page of the slides. For the rest of the things, too much to unfold in today's sharing, but I would be happy to answer any questions raised in the later Q&A section. The third takeaway, which is also very interesting, speaking from a non-custodial wallet brand, that is like serve users from what they need instead of what you want. These two concepts might seem alike, but often they are not, sometimes even opposite. So in our story, SafePal is a non-custodial wallet. So we don't store people's private key. You hold your own wallet. We provide hardware, mobile, browser extension, Telegram Mini, different kind of wallet that you can use, all open source, audited, and non-custodial. But in the wallet, you can find some very interesting features that would be centralized features. The one on the left-hand side is the Binance Trading Mini app. If you have a Binance KYC account, you can actually link it up in the SafePal wallet and start to trade in the Binance Trading Mini app right from the SafePal wallet. So this is a very interesting concept that we introduced 2020 right at the beginning of the DeFi summer, which people find surprising, interesting, and later on find very useful. So this is you typically against people's instincts regarding like how come a non-custodial wallet would build something like this. But the reason is very simple, like people need it. When people trade, what is the best trading platform that they can think of? Right now, Binance is the dominant CX player in the market, and this is no doubt the first option that come to their minds if they are in a market that Binance is allowed to serve. So that means we need to think about what would be the best trading platform for people to use, and we need to find whatever the way possible to have that enabled in the wallet to make it easier for them, instead of opening up two apps, moving their funds back and forth. So over the last 5 years, ever since the Binance Trading Mini app is live in the SafePal mobile app, it becomes one of the most popular feature used in a wallet. And this is a very interesting story. The second is on the right-hand side. That is the Swiss banking feature that we enabled last year. So this is another story regarding like how a non-custodial wallet could become the first early mover in bridging the traditional world and also the Web3 world. In the SafePal wallet, there's a tab called Bank. You can open up an offshore Swiss bank account that allow you to on and off ramp from fiat currencies such as US dollars, Europe, Swiss franc, and CNH into crypto, let's say USDC, and coming next many others such as Tom, such as Bitcoin, Ethereum. And it comes with a virtual MasterCard that you can spend the crypto as you like. Everything happened in the SafePal mobile app. So this is actually bridging the Web3 wallet with the traditional world utility that is increasing the usability of crypto holdings and giving people more accessibility of the traditional financial world and giving them what they want and even what they expect beyond the non-custodial wallet. This whole process requires KYC onboarding done by the Swiss bank Fiat24, but it's everything happening in the SafePal mobile app. So this is a very interesting integration that we have saw picking up in our wallet usage over the last 12 months. We are seeing it widely, rapidly growing in European markets and APAC regions as well. And we are seeing users sharing their feedback on it. We are seeing people organically using it already, and even some KOL promoting this feature. This is kind of a rare thing to see a non-custodial wallet to build. So these two examples perfectly shows sometimes what we think and what we kind of consider or like instantly think about based on our intuition might not be the same thing that users are looking for. So it's pretty important to understand what they actually need and build whatever it takes into your product of what they need, even though sometimes it's against your intuition. So this is the third takeaway. I would strongly recommend all of you to try out these two features in our wallets. They are very interesting to see, very seamless, very smooth as always, but like still very interesting to see like how in a SafePal non-custodial wallet, people can still access these kind of features that typically centralized service would provide. The next one would be like diversified offerings is also pretty important. This might be true for retail-facing products, but not always apply to all product categories, especially if you are a B2B products. So this is actually putting in our feet in the shoes of retail investors kind of serving products. Typically, it is that we need to consider how to stick our users, like how to retain them, how to increase the user stickiness. So like this is actually echoing with the last point. Users actually always want to search for better, diversified, cheaper, faster options. SafePal swap is a perfect example. So from the swap, whichever type of currency that you choose, you will see different provider aggregated in the wallet. So from these logos, these are some part of the partners that we have integrated in the swap engine. Some of them centralized, some of them decentralized. So for the in this case, it's a perfect example regarding like having diversified options will increase user stickiness and retain them over the time because SafePal Swap is the most actively used feature inside our wallet, and we keep a very frequent updates schedule on it. Like every 2 weeks, we have some minor UX updates on this one. We try to make it very transparent for users, and we try to have all of the providers available for the token pairs that you choose in the wallet, and you can see their clear fee breakdown and structure. And we optimize it over the time and try to make it better, faster, and cheaper for users. And over the time, the user make their choice, and SafePal Swap is becoming the most popular one across all our functions over the time. So increased user stickiness with diversified offerings might be useful if you are building a retail-facing products that you are trying to have more scenarios trying to stick users, especially the scenario if it's lower middle frequency. If it's a higher frequency, such as a social app, such as like you are building something on Telegram, then I think it would be a much easier situation because it's much accessible for people to open up your app from Telegram compared to downloading a separate app. So these are some of the insights regarding creating stickiness and increasing user retainers. And then when it comes to growth, I got asked by a lot of friends regarding suggestions regarding our experiences in working with KOLs. Um, I recently saw a tweet that really echoed with my viewpoints. A lot of the projects they buy KOL, not buying the growth, but they're just buying the buzz. So that means you pay like, for example, 20,000, 100K in buying a so-called one bundle package from a KOL agency or from one KOL, and then you're waiting for them to deliver shilling posts and also like articles. But a lot of these projects are not tracking so-called CPA, cost per acquisition. There are no ROI track over the time. Even to be strict, some of the projects are just buying the KOL for the buzz so that they can have enough momentum to push for the token listing of the future TGE. So this is a very seriously misunderstood concept when it comes to KOL strategy. Because like as a serious product builder, KOL should be supporting the growth instead of just creating the noise. So my first thing about KOL strategy is like, is it the bigger the better? No, we've invested and wasted a lot of marketing budget spent over the last couple of years. And to tell you the truth, is not the bigger the better. You have to focus on those who deliver relevant results for you. It's good that you're buying the buzz, but you still have to make sure that they are bringing enough buzz instead of just focusing on the subscriber size. Since we all know there's a lot of wash tractions in the crypto markets, sometimes it's hard to identify which KOLs are of higher value compared to others. It's really difficult to tell, especially if they are coming from the same size of subscriber. You probably have to do some deeper due diligence regarding the engagement rates of their YouTube channel, let's say, the comments, how fake or how real, how authentic their comments are, what are the average rate views of their posts or channels over the last 3 months. Are they being very consistent in delivering their content, or they sometimes they are doing once a week, sometimes once a month, sometimes even longer? So there are a lot of elements that you have to consider, and what are the key goals that you'll be looking for. So it means that only those who fit with your category would be the fit KOLs. So do not fall for the trap of like only consider bigger size of KOL. Sometimes smaller size of KOL would be more sincere, more serious in delivering the results and even have more data-driven insights out of it. Second is that it's totally fine to set KPI in the sponsorship. I talked to some founder friends, which is very interesting. The conversation goes like, I really want to get this KOL on board, but they are being very strict or pushy on the terms. And I was like, you are paying the money, right? So you are the sponsor. It's totally fine to set KPI on the sponsorship regarding the goal that you're setting. It can come in different price model. Sometimes it's one-off. Most of the KOL would ask for one-off cost or one-off budget. It means that you pay 100% upfront. But usually in our case, we'll encourage you to explore more diversified pricing model. Let's say, what about a certain percentage of upfront payments in advance? And then for the remainder, you can pay based on a KPIs and based on the tier of goals that they hit as they release the content. Don't don't be panic if KOLs said no to that. It's usually because some of these KOLs are not confident about their output as well. So it's sometimes like very big KOLs, very well established KOLs usually would be stronger side on the bargain panel. But sometimes if it's a smaller and middle size or KOL who is rejecting KPI, then you should be alerted. So remember, you are paying for the results. You are not just paying for a piece of content. You need to chase the result out of it. So it's totally fine to set the KPI on the sponsorship. The third thing, which is the most important thing that you should be asking yourself, since you are spending the money, it's real money. Right now, most of the KOLs don't really accept your own token compensations. Either they take a large chunk of a token percentage, either they only accept stable coins. Till this moment, like most of the KOLs that we talk to only accept stablecoin payments. So that means you cannot leverage your own token to do the payment. So it means that you're spending real money on it, right? It's not printing out of the thin air. So you have to think about what you're looking for from the result spent. Is it driving for a product conversion? Is it driving for brand exposure? Then what is the exposure and impression that you're looking at right here? Is it for token shilling? It's totally fine that if you recognize it as like just pure token shilling, we don't care. We just want to drive the token listing on the localized exchange. I want to get it done in within like 1 month or two. It's totally fine. That is also a reasonable goal. Then you have to think about like how influential this KOL would be in the token shilling segments, and how active is their community in trading perspective. Is there any track records that have shielded token that is successfully listed on a prominent CEX? So these are all of the due diligence that you have to do. Or is it for SEO? And if yes, like then you have to search for how strong the keyword results would be. Let's say if I want to drive the SEO keywords for crypto wallet, then if I search crypto wallet in YouTube, then I have to look at all of the KOLs showing to me on page one. So that means these KOLs potentially have a better SEO results than others. So it's important that you need to consider like what kind of results and goals that you are driving from the KOL investments, and then track the conversions. This is the following next important step. Sometimes you waste money, totally fine. Get full once, but don't get full twice. So this is the bottom line that I set for myself, especially sometimes I don't see full clear picture for all KOL collaborations. So it's important that we have the conversion funnel tracked, and then we try to filter out whoever KOLs that are actually helpful, and we start to maintain the long-term connection and relationship with them for meaningful partnership and win-wins. Like for example, SafePal also have our own ambassador program, but instead of an open program that we drop tokens, that we do token incentives, that we pay money, we do it only by invite only mechanism. So that means we only handpick the KOLs, influencers, partners who already have a good track record working with us and deliver actual real results to join the ambassador program, and then give them upfront payment, give them whatever financial support, give them the sales support, marketing support, whatever support that they need to grow their ambassador identity. So other than recruiting it publicly and maybe attracting token hunters and short-term spammers, we are more selecting long-term players that are working and growing with the SafePal brand ourselves. So then tracking the data and filtering out these people would be critical for us to build a long-term connection with these influential personnel. So these are some of the takeaways when it comes to KOL strategy, which is also the most frequently asked questions I got from other like founders friends. Hope that they are useful to all of you. So just to, I think the most important question is regarding like instead of buying the buzz, like focus on the goal. Think straight what it are you looking to bring out of the KOL investment, and how well can you track that, and how do you identify whose KOLs could be helpful to that goal. So this is the logical thought process when it comes to spending the budget. Um, the next tips would be a bit kind of applicable to most of the builders. Since sometimes like I hear comments or opinions regarding like we gotta educate users. So I don't like this sentence. I don't like this statement. I do feel that if your product is needs kind of education to use, it usually means that the UX is terrible or is not good enough and it's not intuitive enough. So you have to set your expectation very low. You have to consider the dumber, the better. Like, do not expect anyone to understand the product right away. And we need to educate users as a poor skills to cover your terrible UI UX. So if you want to introduce something new, it would be easier to try to make it happening in the products and easier to digest in bites. We learned our lessons along the way. So in the first 2, 3 years, we spend tons of efforts. We even try to use AI tools to generate tons of articles, like lengthy articles, help center tutorials, infographics, whatever visual graphic kind of content, SEO articles. We even consider hiring a full-time member in helping us in creating this content to tell people how to do this and how to do that. Want to know the results? Nobody care. So for a lot of these contents, they become obsolete and they become abandoned, become a desert. Like nobody actually go and read them. Sometimes, luckily, we might hit some of the keywords that people would be interested about, but most of the time, people don't bother scrolling down the screen, reading a lengthy article just by understanding what is an EOA wallet. So later on, we learned the lesson. We try to break it down in our user journey. So that means if you go and download the SafePal app, if you don't back up your C phrase in the first beginning, totally fine. But then when you have your first fund arising in the wallet, like arriving in the wallet, you again then receive notification telling you why it's important to back up your C phrase right now. Now is the right time to do it, and don't drag it along till tomorrow. When you make your first transaction, we'll then tell you what this means. You can skip that perfectly fine. There's a mockup layer which is like very small, and like we try to make it as light as possible. But this would be very useful as you use the product, you understand what it means to make a blockchain transaction. It's irreversible. Like nobody can get it back if you make a mistake. Make sure to double check on your address, whatnot. So these are the bytes of information that we give to our users as they make their first transaction. When you first time authorize your app to a third-party dApp, then you will learn about what does this approval means. And then when you try to access the dApp on your own in the dApp store, then you also see another pop-up. So we try to separate these information and break it down bit by bit as users walk through these UX in the products, and they gradually understand what it means when they take some critical actions. We see it much easier, and we are seeing our complaint cases from customer support dropping a little bit after we switched to these kind of formats. And it's easier for people to digest, less overwhelming, and having a better result. So it's a more like a guiding process instead of lecturing them, telling them not to do this, make sure to do that, don't forget to do this and how to do that. So and it should be a gradual bit by bit process that as product use your products, it should be intuitive, of course. But if you want to introduce something new, the concept could be aliens like to the new users, or this is some cutting edge technology that you're trying to introduce, which is 100% different from all of the previous products that people might use from the market. Then it's probably easier that you break down this information in the product itself, and as time goes by, as they walk through the process, they can gradually learn the concept behind it. other than like purely depending or hoping they will be going through the articles and content that we write. Of course, those are still important when they try to search for something, especially when nowadays it's pretty important that you build your product and build your content AI friendly because people are gradually using more AI engines. In contrast to searching engine to look for the answers. So that means all of these online content help center articles would still be useful, but in another scenario other than straight user education. So that is the another small tips that the lesson that we learned over the last journey. The last thing here, and also what we see pretty important, is that building the Lego with partners would be much, much faster and be very helpful. So I'm putting our examples with the Tong ecosystem here, since we are really humble and we are very grateful that we have the support, we have the service and also the connection from the Tong ecosystem to build products such as co-branded products, such as like our own mini app, such as introducing our banking gateway on Telegram even. So over the years, SafePal actually focused mostly on three tractions. If you ask us where our users mostly coming from, the first traction from the funnel would be KOL. So indeed, KOL would be a useful strategy that you can consider if you are looking at go-to-market strategy. It's just that you have to be very sensitive on the budget spend. You have to make comparison between the KOLs. You have to make wise choices. The second traction comes from social media. Most of the crypto people are active on crypto, and managing the social media would be the most low cost, the cost effective way to attract your potential users. And last but not least, and something that a lot of builders might oversee, is that building partnership with other builders, especially those solid builders that you recognize value, that you recognize synergies with your products, and to scale the effect faster for two reasons. The first reason is that most of the time, the users that you are looking for are probably also in the community of your partners. So if these are the potential users that your partners already found for you, it's just a matter of time that you connect to these users if you find the right product synergies between the two brands. Second is that it's sometimes co-building with other partners along the way, you can learn a lot of insights. So like understanding the trends, understanding what partners are focusing on could also inspire you as a founder in building your own products. So it's like founding your own team and product could be a very lonely experience. And it's always good to make friends in a space. And usually the friendship starts from co-building a product together through a partnership. So over the last 7 years, we focus a lot on building meaningful, successful, helpful partnership with a lot of brands such as Tom, such as Binance, such as Circle, and a lot of others. So this is pretty important. And we also help a lot of other partners to grow. So let's say in the wallet, we do have a Quest program that help to filter out token spammers, that try to set a whitelisting mechanism to filter out the users that our partners are looking for, try to introduce social tasks, but in a variable way. And also have in-app dApp connection so people can actually go to your dApp and then complete the quest itself. So other than just doing social tasks, we want to straight pull the users and attractions towards your decentralized apps in the wallet that they can connect SafePal wallet and start using. Um, so we have done a lot of these kind of cases with other partners as well. So we are very humble and we are happy and grateful that we are able to be still standing here and supporting other founders and partners along the way. So we have held a lot of pre-TGE and post-TGE projects to acquire quality users along the way. Like it can be DeFi users, NFT users, trading users, different kind of users that we help to try filter out along the way. So these are some of the key takeaways that we learned over the 7 years. So 7 points for 7 years, not one each year, but like we gradually accumulate over the last couple of years. Yeah, so I hope that covers most of the points that you might be interested in finding product market fits. Our case, again, might not fit 100% with yours, but always happy to answer any questions that you might have. I believe Alec would be bringing up those questions, and I'm happy to answer any one of them.
Yeah,
I
thank you so
Alec,
much,
microphone back
Veronica.
to you.
Yeah, that
Yeah.
was really good, and you were speaking nonstop for 1 hour. But yeah, you made the things really easy to understand. I really enjoyed to listen to you and how you can explain complex things in such a easy way. And let me quickly check the chats if we have any questions. So, guys, if you have something to ask about the topic, please leave your questions on YouTube, on Zoom. Those people who are on Zoom, you can also unmute yourself and go for your question. And I see the first question, which says, how much is the cost of an MVP project for you? How to detect an idea which is worth to spend money and time on it?
This is a good question. So for in our case, for our first year and a half, we did nothing else but just building on the first hardware wallet, SafePal S1, which is the most popular wallet on our website. It's selling at $49.99 on the website officially, and right now distributed to the globe across reseller, affiliates, and sales partners, whatnot. I kind of lost track of the data, but now that we look at it, we probably spent. Let me think about it since I need to do the currency convert. About one, about at least 100K, at least, excluding the human resource burn rate. So that means the cost that we spend on building the physical products. Um, it's more complicated, but if you're building a software product, I would believe that would be much lower. So the fingers crossed. I believe it's much lower if you're building a software product because you can it's simply delivering faster. You can have a shorter cycle of having it testing, trying out, and then iterate and then test out again. It could be a very short cycle for software development. While when it comes to hardware, it will be dragging much longer the time. So we spend about 18 months when we finally open sales for the first hardware wallet. Since simply because there are some physical process for the hardware wallet manufacturing, such as sampling, mass adoption, or whatnot. There are a lot of different things back and forth in the middle that could waste like 4 to 6 weeks of time just waiting for the factory to deliver us the first sample, and we need to go through the whole testing and then get back and then make some physical changes to the PCBA. So that would be a much longer process. But when it comes to software products, I believe it would be much shorter and also much cheaper than the cost that we're looking at in our case. Second, how to make sure this is a worth building idea? Good question. First, try to see if there are already other products in the market. If yes, do spend some time looking at how well they are doing. By how well they are doing is that first, try to understand how many users clients they have acquired already. Second, see if you can pull any pricing model out of it, so you can have an understanding regarding like the business model building. This is the core of founding a company. Third, like try to talk to some of the potential clients, users, or user profile as you see it, to talk to some of these potential people about your idea and try to understand. It would be great if they are already using an existing product that looks similar to yours. That's case one, and that would be great because these people could usually give out like reasons regarding like what they dislike of the current product they're using. For example, back in 2018, when we asked people what do you like and dislike about Ledger, like people give us a bunch of reasons, and those are actually the initial points that we start to focus on building our own products, right? So if you have seen other people building similar ideas, that would be easier because you have some track records that you can check the business model, the addressable size of markets, and you can also do in research regarding the current users already using the product. If it's a brand new idea that nobody on the market is building, usually there could be two situations. The first situation is that it could be a very small niche of the product that nobody is touching on it right now. So these might not be a positive aspects. So it means that because right now we are already looking at more than a decade of crypto development of the industry. So right now we are seeing crypto becoming more financialized, while gaming, metaverse, NFT, meme, they come in cycle, they come in hypes, but then they up and down. One thing to stay long is DeFi sector. There is a financial segment, like crypto assets as the financial category. So if you are building a financial product, then you have to consider why this price is still not here yet now that we are looking at the booming development of it. Is it because of the market too small? Is it because it's too niche? Or is it because it's not profitable? So these are the questions that you have to really dive in. Second possibility is that this idea is too advanced and too new, that is still a small niche that could be useful in the upcoming future, but not really like widely adopted right now, such as the AA wallet. It's just starting, not widely adopted, but it's quite promising in the long-term future. So this is actually a positive sign that you can consider building something early because early mover have their own advantages. Next question is always very important to do your user profile research and investigation. Try to picture who you are serving, try to find these people and talk to them, whether they are companies, whether they are retail investors, whether they are kind of custody solutions, whether they are KOLs. Talk to these people, sincerely ask them questions, explain them the ideas, and ask them whether they are interested in it. If you gather enough interest in it, then I think you can seriously sit down to ask those questions that I just shared in the slides. That is about the business model, about like why you are capable of it and why this opportunity is yours, like how strong the demand is, all of those questions. You can gradually dive into these questions, and then now then you have a complete picture regarding the size of the market, the potential users' profiles, the user research and feedback, and how to design it, what are competitive edge compared to other early movers, etc., etc. So these are my suggestions.
Okay, yeah, thank you for such an extended answer. And may I quickly ask, how was your company secured and backed up finance in the very beginning when you were starting the company?
Oh, that's a good story. Back then, 2018 was the year when the Binance Labs, later on they rebranded themselves as Easy Labs. Earlier this year they rebranded. They call themselves Easy Labs as a new brand. But back then it was called Binance Labs. Binance Labs was launched in 2018. They launched the first incubation program in San Francisco. It's a 10-week offline incubation. So that means you have to be physically flying to San Francisco, stay there for a whole 10 weeks, and then on a demo day, do the roadshow in front of all of the Silicon Valley investors. So we submit the application. I still remember in September 2018. We consider it as a very exciting opportunity. We also consider our products as very competitive, and we are pretty confident that like not everybody can build hardware wallets, especially we have the know-how and combination of both skill sets in hardware and software. So we submitted the application in September 2018 and we got enrolled. So we were the only wallet team enrolled in the first incubation program. There were 10 projects selected back then, and we are the only wallet projects. That's how the story began. And after the incubation, Binance invested in us and we deliver the products and we start to build whatever business roadmap that we have designed for ourselves that year. And I still remember it was in May 2019. Binance launched the first Binance Blockchain Week in Singapore. We did the roadshow and open sale of our first hardware wallet on that Binance Blockchain Week. I still remember that very exciting moment. So that's how the story begins. So right now, Binance is a very strong supporter of ours, and they have been always been supportive over the years. And that's also the part of the reasons why we are having the Binance Mini app integrated in the wallet, and also have quite a lot of useful other Binance features in the wallet, such as Binance Earn, such as Binance Connect, and a lot more of other Binance ecosystem portfolios and partnerships as well.
Yeah, very interesting. So there are a couple of questions on our YouTube channel. So the first question
Mhm.
says, we have a project on Ton and Telegram for real world use of crypto called Paravel. Is it better to use is it better for us to have built a wallet or connecting to other wallets like yours?
This is very, very valuable question because today I just discussed it with another founder. Because that founder told me he asked me, Veronica, since SafePal doesn't do white label wallet solution, do you know any other white label wallet solution on the market? We want to talk to them since I simply don't want to build our own wallet. This is a DeFi builder. So this is a DeFi founder. I tell him, so the logic is like this. It depends on what wallet elements means to you. If wallet is not in your core business strategy, let's say if you are building a social app and everything is done in the social app and on the mini app, and wallet is just a matter of login, and there's no kind of other core utility to it, and there's no business strategy or value bind to it, then I think it's fine that you leverage the support and connect to other wallets, because the advantages of doing that is that you can build a partnership with other wallet providers like us. Like you can talk to us and make it connect to SafePal in your app, and then we can also help to pull traction to your D app as well. So this is pretty helpful for bootstrapping, especially when in the beginning the resources are very limited. But the second question to ask is that if the wallet element is critical to your case, let's say if you're building a financial product and wallet would become a very important vault that people put their money in, they even need to engage with the protocol and whatnot. And then you would have to consider whether you are having any business model or value on top of that. In if yes, if the answer to all of these questions are yes, then you have to consider whether you can build on your own. So this is more related to the business strategy that you have, other than all others. If you put it in stages, I would say in the first beginning, yes, it would make more sense to leverage other wallet providers' help. Like you can partner with others, you can simply allow people to connect to. It's simply easier that way that you onboard new users sometime. They can connect to whichever wallet they like, and it's you make the door open for every single one of them. But then the next question would be like you will have to gradually consider whether this is part of your core business strategy and whether you would really need to consider having your own account system in the wallet in the application. So that question would have to be back to you. But this is just giving the logic regarding like what to think about when it comes to whether to go use external wallets or building your own.
All right. So the same person says it's very important to our users not to leave our website for using their crypto. Yeah, but that's just a comment. So, considering that the majority of the founders that we have at Nest is quite technical. I mean, all the founders, they don't have enough of that kind of startup mindset, startup hustle kind of things, but they are very good at engineering kind of things. I remember from your presentation the part about where you are telling about not to do what you want, but do something about doing what users need, as far as I remember. Yeah, exactly
This
this
one, yeah.
page. Yeah, is there any kind of way to make a proper research on that, on making the right customer development? Maybe you have some insights or any kind of practice in these regards.
Thank you for asking, Alec. For sure, like the easiest way would be to talk to the people. Like in survey, in Telegram chats, talk to these people, because you definitely know who you are serving since you already have a building idea. You definitely know who are the potential people that could use the product. Talk to these people, ask them what they like and dislike about the current things that they're using. Ask them if they don't consider any of the elements, like don't consider whether the technically is tangible, whether there's any existing protocol supporting that. Ask them all of the crazy ideas they want to have from using that product. It's always the most valuable part that would be listening to the user feedback and talk to them. And then it comes to like what are the technical roadmap that you can plan out in building the products, because it's definitely not easy to have like a bank service in this non-custodial wallet. It took us about like 6 to 7 months in making this happen, and indeed a long way. So but that is only the process. But the beginning is that people need a friendly on and off ramp channel. They want to spend their crypto now that they have a lot of holding in the wallet. They need to have real world utility on top of that, other than just holding and yielding. So like these are the initial user demands. And then it's developed through a product like this, and then it's proved that it's correct. So over the time, like we do regular survey with our users in different formats. Sometimes we push survey to certain user category in our app since we do have a push notification. So we push survey, we ask for their genuine opinion. We don't try to bribe them or incentivize them saying that we have a token here and please fill in the survey. We usually try to be very sincere and genuine, saying that you are very loyal and also a valuable client to ours. We really want to hear your feedback on this. And usually people are more generous than we thought. So they are pretty willing to fill out those survey and give you your insights. And we learn a lot from those insights as well. And also we heavily rely on community feedback. We have community on Telegram, on Discord, on Twitter. We also have customer support. So we have a share group internally. All of our CS, CM, and marketing and ops team would join together, and people will share different feedback. And these feedback will be funneled back to the testing team, to the product team, so they can digest and they can calibrate the development trajectory and roadmap and try to prioritize the request pool. So these are the most important thing that we think we have done, and also the most helpful strategy that we can think of.
Okay, yeah, very useful one. So another question. As you know,
Mhm.
going from 0 to 1 is harder than from 1 to 100. How we can make this process easier? Any shortcut based on your experience is valuable.
I can't say there's any shortcut, to be honest. Like every story, if it's not me, if it's another founder, like I'm not sure if anyone can give an easy answer to that one. It's only you who understand what you are building, and it's only you who would be having the idea and confidence strong enough to build that and deliver the product and bring it to the user. And you don't even know whether people would like it until they use it. So this is it's a torture, to be honest, to a lot of us. It's especially when like, we see criticism, when we see the product is not used as frequently as like other features by users. So I can't say there's any shortcut. But all of these takeaways that I gave along the way, I think these could be pretty useful, practical takeaways if you want to build up something on your own, like regarding finding estimating the market, like these question lists that I'm sharing here. Understand these questions and doing proper investigation and homework could save you some of the times and wasted of resources in the upcoming obstacles if you later on bump into any one of them. Let's say running out of money and or not making the product profitable whatsoever, or having a very strong competition from others where skill sets of yours is not competitive enough, not rolling fast enough, and then like some new changes in the industry kind of all of a sudden make your idea obsolete. So thinking clear of these questions in the beginning is my takeaway. Like if you have to ask for me to just put in one sentence, I would have to say think these questions clear and talk to the investors or friends or users that you can reach out and collect as many feedback as possible. But these would be the same questions for all founders if you want to build something on your own. If you have a new idea, you're not sure whether you should go for it and whatnot. So from 0 to 1, I think the most important thing is that make sure somebody need the product. So this is the one and only thing, because like the only demand can drive the growing of your product. And so you have to make sure that it's a long-term consistent demand that you're doing. All of the rest will come in second. So the first question on these slides would be the strongest thing that you need to ask yourself from 0 to 11, the 2 to 1. Because in our case, we know that people need a Web3 wallet. From our case, in 2018, even in bear market, we are still seeing the independent addresses on Ethereum still rocketing high and growing exponentially. That gave us the confidence. And that gave us the imagination of the future that everybody is gonna need a Web3 wallet in the future. It's gonna become the gateway. So based on these thesis, we decided to build on wallet. So this is a very strong demand. It's based on the thesis that on-chain value would increase over the time. It's based on the thesis that consensus cannot be rolled back. Once the consensus is formed, nobody can destruct it. and the consensus of on-chain decentralization, permissionless, trustless future is already there and proved by the rocket increasing Ethereum growing over the time, even in bear market. So these are some of theses that we investigated and decided that this is actually a segment that would sustain in the long term and being very consistent and also have a strong user demand over the time.
Okay, yeah, that was really insightful. And yeah, the entire session was also very insightful. And at the same time, that was really inspiring, I would say, hearing to the suggestions and to the experience of a CEO and co-founder of a pretty productive company. That was really interesting. So yeah, this session will be posted on our YouTube channel, and it will be shared for the Tonnes participants as well. So, Veronica, thank you so much once again. I will be very happy to see you on our stage in the future. And yeah, thank you so much for your time. And whoever will be watching this as a recording, please feel free to leave your questions in the comments, and we'll be coming back to you with the answers. All right, then. I think, yeah, the only thing to wish is to congratulate everyone with the Global Bitcoin Pizza Day. Yeah, this is May 22nd,
Yes,
still.
happy.
Yeah. So please
Yes.
get your pizza if you didn't do it today. And yeah, have a great rest of the day. And thank you so much once again. Bye bye, everyone.
Thank you.